Welcome to a new presentation where I will be talking about the financial module. In this presentation, we will explore how to set up a chart of accounts adapted to the company type. We will discuss the chart of accounts structure and the effect of standard processes on the chart of accounts. We will look at how you manage the chart of accounts and discuss the options for defining default GL accounts. SAP Business One is a full-suite ERP solution for SMEs. It comes with a complete set of accounting and financial tools to assist SMEs in the management and streamlining of financial operations. SAP Business One automates daily accounting tasks and integrates financial operations with other business processes in real time, also improving visibility into cash flows and increasing the speed of transactions. With SAP Business One's accounting and financial tools, executives also get a single overall view of the company's financial operations. This enables executives to make better financial decisions with more insight, identify cost and efficiency with the organization more easily, and make necessary adjustments to reduce redundant costs quicker. We have several parts of financial. Accounting automatically handle all key accounting processes such as journal entries, accounts receivable, and accounts payable. Controlling or cost accounting accurately manage cash flow, track fixed assets, control budgets, monitor project costs, and compare actual and planned figures. Banking and reconciliation quickly process all reconciliations, bank statements, and payments by various methods, including checks, cash, credit cards, and bank transfers. Financial reporting and analysis. Create standard or customized reports from real-time data for business planning. Within the accounting and financial module in SAP Business One, users will be able to access a wide range of applications including chart of accounts, structure and editing, financial report templates, journal entries and vouchers, recurring transactions and postings, GL account determination, advanced items and reports, and they are today's topic. The receivable and payable control accounts accumulate the customer and vendor transactions in their balances. For example, when you post an AR invoice, the accounts receivable account related to the customer is used in addition to customer account. Therefore, the chart of accounts present the complete financial status of the company as well as the financial reports, profit and loss, balance sheet. The chart of accounts is an index of all GL accounts used by your business. Every GL account has an account code, an account description, and additional information that determines the functions of the GL account. When you implement SAP Business One, you define or import the chart of accounts and default GL accounts to be used when transactions are created in the regular business processes, sales, purchasing, inventory, and more. You have three options for defining a chart of accounts. Select a predefined chart of accounts template. This option could be suitable for a standard company, especially a new company, a legacy chart of accounts. Import the chart of accounts data from a legacy system. The second option is to import the chart of accounts data from your legacy system using the Data Transfer Workbench tool. If the company wants to keep their chart of accounts, they can still recognize the structure before the import. And the third option is to define your own chart of accounts. This option allows you to create your own customized chart of accounts. An organization can use this opportunity to determine what the chart of accounts structure should look like to accommodate their needs. The organization of the chart of accounts follows GAAP, generally accepted accounting principles, in which there is a separate drawer for accounts representing assets, liabilities, equity, revenues, cost of sales, expenses, financing, and other revenues and expenses. These drawers, which have been defined by SAP and cannot be changed, Organize your accounts by level in a logical fashion appropriate to your localization's financial accounting and reporting processes. The accounts colors represent their functionality. Titles appear in blue, normal active accounts in black, accounts that were entered in the GL account determination window, that is default accounts, are displayed in green. In the general ledger, we distinguish between balance sheet accounts and income statement accounts, also called profit and loss accounts. Let us start with balance sheet accounts. The first three drawers, assets, liabilities, equity, hold the balance sheet accounts, such as the sales tax account and the accounts payable account. The bookkeeping balance of these accounts is kept from one fiscal year to the next. Next, we have the profit and loss accounts. The last five drawers, revenues, cost of sales, expenses, financing, and other revenues and expenses, hold the profit and loss accounts, such as income accounts. The bookkeeping balance of these accounts has to be cleared at the end of each fiscal year during the period end closing process. The profit and loss accounts reflect the changes in company value, such as when you sell stock. The cost of goods sold account is affected and increases revenues. A chart of accounts arranges a company's general ledger accounts in a hierarchical structure. The top level in the structure, Level 1, consists of sections of groups for different type of accounts: assets, liabilities, capital and reserves, turnover, and so on. The number of accounts groups depends on the localization that was selected when the company was created and cannot be modified by the user. The chart of accounts varies according to the company's localization. Let us look at this specific example of chart of accounts that contains 5 levels. Levels 2 through 4 can contain either active accounts or titles that combine several active accounts. Level 5 in this example contains only active accounts. Because only active accounts can be posted to in SAP Business One, it is a good practice to have all your active accounts at the same level. With the chart of accounts, you also have the ability to assign different segments. You can then use those different segments to narrow down P&L, profit and loss, or balance sheets to specific information. On any account, you also have the ability to drill down in the balance to see all the postings for the specific account. This is particularly useful for when you want to do internal reconciliation, as you can even make adjustments directly from this page. Also, in the chart of accounts, you will find your cash account and cash flow relevant sections. Cash flow relevant is related to the statement of cash flow, and the cash account is related to the cash flow report. Once you enable cash flow relevant and start having transactions, you cannot change it. If you wish to control the structure of the chart of account, you have the option to edit. You have a few options for this, but the easiest uses a different menu under the Financial tab called the Edit Chart of Accounts. The Edit Chart of Accounts application can be used to adjust the chart of accounts. For the Edit Chart of Accounts window, we choose the Edit Chart of Accounts option from the Financial module, and then we choose a drawer. For example, the operating costs. In this window, we can add a new title, delete an account, change the structure of the chart of accounts, and move titles and accounts within the structure of the chart of accounts. We can also add an account in the Edit Chart of Accounts window using the Add Sub-Level Account button. In general, if you run a financial report, it will pull the report in the exact format of your chart of account. Sometimes this isn't exactly what you want or need. For that, you can create a financial report template. With these templates, you can right-click and add, move, or remove sections of the financial report, as well as rename sections in the report. This template does not change your actual chart of accounts. It just adds new options for running reports. A journal entry is a record of a transaction that usually includes the transaction's date, title of affected account, amount of each debit and credit, and transaction description. The majority of journal entries in SAP Business One, such as those that come from the sales, purchasing, payment, and inventory modules, will be automatically posted to the GL. However, users may have to make certain manual journal entries via the journal entry window to record transactions that are not automatically initiated from a subledger or from another process within SAP Business One. First is the origin, which shows you where the entry came from and allows you to drill down into the specific information associated with it. Under the Contents and GL Account section, you have the Expand Editing mode that allows you to see different things on the highlighted line. The documents in the sales and purchasing processes create automatic journal entries that are registered in the journal entry file and affect the account balances. A journal voucher is basically a draft of a journal entry. Journal vouchers can be used to review a batch of financial transactions before posting them. When a voucher is posted to the general ledger, all the journal entries contained within the voucher are posted together. Before posting the vouchers, edits, changes, and deletions can be made to entries. Journal vouchers can also be used to save incomplete journal entries, allowing users to return it at a later date. In addition, journal vouchers allows users to perform what-if analysis by running the associated cash flow report and open journal vouchers to determine the effect of the entries before posting them. There are 3 different ways you can automate financial processes: posting templates, recurring postings, and recurring transactions. Recurring transactions can be found under Sales AR. Posting templates help streamline the posting of individual journal entries that repeat from period to period, but where the actual amounts are not known in advance. The posting template function can be used to allocate an expense as a percentage over 2 or more departments. Some transactions recur monthly or weekly, and their amounts vary and the percentage may not necessarily be fixed. Recurring journal entries can be used for expenses such as depreciation, equipment lease payments, payroll, and office rent and utility costs. Canceling a manual journal entry can be done by locating and canceling it. A new journal entry opens within the amounts reversed, and all the user has to do is add. Alternatively, a reversal of journal entry can be scheduled by date. Automatic reversal of manual journal entries is usually set up to occur on the first day of the following month. So you can use the GL account determination window for defining the company level accounts in one place. Many companies will find the company level accounts sufficient. For tailored business scenarios, you have the option to define rules for assigning GL accounts in journal entries. Those rules support GL account determination for item code, item group, warehouse code, ship to country, ship to state, federal tax ID, and business partner group. Any rule you define in the advanced form will have a higher priority than the GL account determination window in determining which account is assigned in a journal entry. The advanced rules column will indicate if a rule exists. Once the user defines an advanced rule for a specific account, the advanced rules column of this account will be updated in the GL account determination window with a number of rules for the account and link to the advanced form. While choosing the link arrow, the advanced form opens, filtered, and displays on the advanced rules related to this account, and the form will be opened in edit mode and the user can update it. When you enable the advanced solution, the determination criteria window appears under the GL account determination menu item in the financial setup area in the administration module. The determination criteria window provides a predefined list of criteria. In this window, the user will be able to activate all or some of the criteria depending on the business need, and if an active determination criteria is not in use by any of the advanced rules, you can uncheck it to make it inactive. There are two options for account determination in transactions involving items: the traditional solution of setting a default GL method for an item or the advanced GL account determination solution. Both options are based on the accounts defined in the GL accounts determination window. With the implementation of the accounting and financial module, business can expect the following business benefits. First one is streamlined financial operations. Automate, integrate, and manage all the financial processes in the company with a single solution, eliminating duplicate entries and errors. Second one is faster closing process. Close books faster with automate processes and the ability to access accurate and timely financial information. Third one is improved decision making. Get a unified financial view of the business by integrating accounting data with sales, purchasing, inventory, and operational information. So, a great strategy is useless without the right resources. Finance and accounting departments need to be on board with the company's overall digital transformation vision. This will help the business move forward and compete effectively in the digital age. This was a presentation about the financial module. I hope you enjoyed. You can visit our website for more information.